The Metropolitan Assemblage is hands down the very best deal we have ever brought to our investor base.
The land price was negotiated and secured just a few weeks before the announcement of the new 485X New York housing program. The new program, which is fully elective, offers developers a 35-year real estate tax abatement and a 33% increase in buildable floor area.
These benefits are in exchange for allocating 20% of the apartments to slightly below average income tenants at below market rents. It's a highly attractive offer.
This resulted in a land basis of only $226 a square foot, in a market where land typically trades at around $350 a square foot.
The deal is also located in an opportunity zone in Williamsburg in Brooklyn. Williamsburg is both one of the most desirable areas in New York City and one of the most desirable opportunity zones in the country.
It's exceptionally rare to find a development opportunity which is both in an opportunity zone and which is in an area where condos are trading at over $1,600 a square foot, and where a new two-bedroom apartment, for example, would typically rent for $6,000 a month.
The development plan includes 3 buildings with a total of 132 apartments. The total cost is projected at $82 million. The value at completion is projected at $135 million, and this implies an impressive margin on cost of 65% and a development profit of $53 million. There is also the 2-phased aspect to the deal. After completing phase 1, we will be able to refinance the completed building, withdraw all of the equity that we invested in phase 1, and redeploy it back into phase 2, really maximizing the use of the invested capital.
This means that in year 5, when phases 1 and 2 are complete, we plan to return the full amount of investor capital back to our investors without diluting anyone's ownership in the deal. The deal also has a 10% preferred return, and only after that do the sponsors share in any of the surplus profits. The projected net IRR to investors is 19%. Since it is OZ, these returns are effectively tax-free, meaning that the pre-tax equivalent IRR is 22%. This means that a $1 million investment is projected to produce about $4.4 million in proceeds over the 15-year period. The pre-tax equivalent equity multiple is 5.4.
This would be an extraordinary investment outcome for even the most demanding of real estate investors.